Hey, what's up, Bob Mortgage Nation? This is the 13th episode of the Ask Bob Mortgage Show. You have questions, I have answers. Great question.
What I want to be able to do is give you world life experiences that I've been going through.
So what do we do on the show? We answer your questions. Now, if you're out there on social media, you could just drop in any question you want and hashtag Ask Bob Mortgage. My team's going to go through all the questions, bring them to me, and I'll answer them every Friday. So this Friday, we got Leo in the hot seat with the questions. So let's roll, man. We got some good ones?
Yes, sir, we do.
Love it.
All right, so Bob, we've got Bubster85 on Instagram asked, what's the minimum you can put down on an investment property?
Bubster85.
Bubster85.
LinkedIn. Thank you, sir. Appreciate you. All right, so I'm going to go with, on an investment property, you have, there's a couple of different ways, right? So if we're doing a buy and hold, meaning they're going to put it in the rental portfolio, it's just one that's, they're holding it, they're going to buy it and hold it, it's going to be 15% down. Mm-hmm. So minimum down payment of 15%, but we also do what are called fix and flips. So in a fix and flip scenario, somebody's going to buy that house, want to do the rehab and get out of this house in 30 days, 45 days, 60 days, something like that, then that's going to be 20% plus, right? So typically 20, 25, 30% down is going to be those fix and flip scenarios, but definitely the fix and holds can go down to 15% down payment. So great question.
Awesome. All right, well, next on, we've got Chris on Facebook commented on the 8th 1-minute mortgage solution.
We had a gentleman coming to us wanting to buy and build an $875,000 home. The challenge was he had no money and he was concerned with interest rates because they're on the rise. So how did we solve this challenge? Here's what we did. He had an existing home. We cashed out his equity from that home, and then we did a one-time close on his new build for a jumbo loan at $875,000. Locked in his interest rate, we closed it. It took him 12 months to build the house, but he doesn't have to worry about the increasing interest rates.
So there is a lender that will lend on a house that's not even started being built?
Yeah, okay, so that was on the one I was thinking, it was on the one-time close, yeah. Mm-hmm. So Chris, what happens on that one is, it's called a one-time close, and it's for people that want to buy the lot, let's say the piece of land, and build the house all at one time. They don't want to do two-time loans, is like get one loan for the lot, then the construction loan, and then roll it into a permanent loan. So we will do what's called a one-time close, where you qualify for it today. Let's say we're going to close in December. We qualify for it today. We close on December 15th, and we're helping you purchase the piece of land, the lot. We're providing the construction loan, and we're working with the builder to completely build that home. Now, the good thing is with those is you don't have to requalify. Okay, Chris, you don't have to requalify in 8 or 9 months when the house is finished. We can lock in your rate now at the time that we're doing the loan in December, even though you may not be closing until April or May, let's say. So there's a lot of advantages for you in that sense, especially since there are rising interest rates out there on the horizon. So yes, we can do it, but it's going to be in that one-time close scenario without any house at all on that piece of property.
Awesome.
Cool.
All right, well, next we got Amanda sent in a video for you.
A video?
Yes, sir.
All right, man, let's check it out.
I was just wondering how the new loan limit would affect the down payment on a $480,000 house.
Oh, I'm going to watch this again.
Hey, Bob. I was just wondering how the new loan limit would affect the down payment on a $480,000 house.
That's pretty cool. So, Amanda, props to you for getting creative with the video. I love that. A lot of our videos we're getting some creative stuff coming in.
Amanda Payne.
Okay, so $480. So $480,000. Typically, so what she's referencing is she probably just watched one of my other videos that I put out. The loan limits for Fannie Mae Freddie Mac conventional conforming limits are increasing from $453,100 to $484,350. Okay, so if you're buying a $480,000 house, as her question previously, and you wanted to get it to that $453,100, you were going to have to put down $26,900. Okay, But now we're only going to need to put down, if we're going 480 and we're buying in January, then you can put down the minimum down payment of 3%, and that's $14,400. So you're looking at a $12,500 delta. So I made it I don't have a panda face that I can put on, but maybe Brandon can do it for me. To answer your question, it's going to be $12,500 is now the delta in hard cash that someone's going to save by this type of increase in the loan limits. Okay, and as well, I mean, the down payments are great, but now you can avoid the underwriting guidelines and jumbo loans. Awesome. So that's a good thing. Anything else?
Nope, that looks like that's it.
That's good. Awesome. Hey guys, we certainly appreciate your questions. I really do. Thank you very much for putting them out there. Just keep going. Social media, if you're around entrepreneurship, mortgages, social media marketing, anything like that, working with a spouse, sports and business, you just keep asking questions and I'll keep answering them.